Everyone wants to make money in the market, whether you're an investor, whether you are a trader. Now, these are a lot of pitfalls we need to talk about. Patience is a big thing, but throughout this video, we're going to talk about those pitfalls, the bearish rallies that could catch you out, the market volatility, and most importantly, the low price metrics, the unit price. Lower the unit, the more volatile those percentage numbers can be. So let's crack on. On the screen, we are on CoinMarketCap. Hello and welcome to the Market Mobster channel. Ready? Good. So I want to talk mainly about the current market state and where it's at and what is happening. A few weeks ago, I talked about BTC not moving much. I was like, oh, it's not really moved much, has it? Now look at the last 30 days. It's moved significantly, right? We need to talk about that. And a lot of things have, some have not, right? It's interesting. A lot of altcoins have actually done better than BTC, which is kind of hard to believe when you think Bitcoin has gone from 43,000 down to 17.5 thousand very, very quickly in a matter of about 5 to 6 weeks. It is pretty barbaric, right? We need to talk about it. But we will go over a lot of things in this video. So if you are new, make sure you do hit that like button at least. You don't have to subscribe, don't really care. But if you like my content, leave it a like. It does help. Now, I want to talk mainly at the start of this video about patience. We're going to then go on to something that is pretty boring to a lot of people, which is the current price action and how you can maybe fall into pitfalls of volatility and ultimately how influencers can influence your decision, which, by the way, if you've not yet done so, I am doing a podcast episode on Monday. I'm going to record it this weekend about influencers. It's going to be a pretty big one. So yeah, could be a good one. The influencer playbook. The bubble is about to burst. Ooh, all kinds of stuff going in my head. Anyways, patience is hugely important. We're in a downtrend. You're going to be enticed to buy in stuff. There's nothing wrong with buying if you've made a plan. Previous video, you see the picture here. Make a plan, execute your plan, go with it, right? However, don't be startled into a decision because we've moved up by 3-4%. Okay, that is where I'm getting at with this video. This is where mistakes will be made. Mistakes, huge mistakes, cataclysmic mistakes. You don't want to buy the dip that keeps on dipping because you've went away from your plan. There's nothing wrong with standing still and surveying the surroundings. There's a lot of stuff happening in this market. Traditionally, decentralized world, centralized world. The massive mess in the crypto world is even more apparent right now. So let's talk about a few things, right? As I say, patience is important. So let's talk about BTC. What's happening, right? So this is all analysis. You've probably seen this on my chat before. We went to that box. Pretty significant box, as I say, roughly around the previous all-time high of BTC. A lot of people didn't think we'd get below 40k again. Some people didn't think we would get past this level. Any level is a level. Doesn't matter. History is history. You can say that about football. You can say that about Formula One. You can say about any sport. Rules are to be broken. History will be made, right? Same in the financial market, right? Does not matter. So we could go much lower than this. Doesn't matter. It's a number, right? It's technical analysis. It is ultimately a self-fulfilled prophecy, whatever. But it's ultimately one thing and one thing only. Fear and greed, right? People's emotions are playing with these, right? So when we look at this, let's update it. Let's do a swing high from here, okay? And all the way down to this low. Personal opinion. I believe the market will want to start going back up again into the 23.6, which is a significant number and a significant level for BTC with volatility. Wouldn't shock me in the slightest going to 24k. Wouldn't even shock me in the slightest if we went and retested 30k. You've got to be ready for it, right? Whatever your bias is, I don't care. Whatever you're thinking, I don't care. But at the same time, it's down to you in what you act and what you do. Problem is, we're going to see influencers getting very, very bullish when we start approaching this level and probably this level. Will we go higher than that? Potentially. Yeah, of course. Why not? But we'll need to see where things go. Currently, the traditional market looks a bit crap. US markets are shut today, but doesn't mean for a bit of market manipulation coming at some point. So we need to be very, very, very careful. Now, if the market does want to pull up, as I say, a lot of excitement, but I think a lot of people will be shorting the market on you at those regions, because I think people are fearful of the next coming months in the market. And as I say, patience is key. Just wait and chill out. So current price analysis for BTC, nothing much to report other than the fact that we are in a level range, which in my opinion as well, this wouldn't shock me if we actually trickle around here for a little bit, maybe not for a full year, but I'm just saying we may well trade around this level between 22k and 18k. We may be kind of flip-flopping around that level. So just be careful of what's going to happen with volatility. Let's talk about the total market cap. Again, well, all analysis, that's kind of somewhat important in my opinion. And we need to pay respect to these levels, right? Levels are levels and they are reference points, okay? Make sure you understand that. We came very close to this level here. If you don't know what this level is, if I zoom out, you'll see it. It is a previous all-time high body closure on, I think it was a monthly time frame, give or take around that point. So you can see it. We came pretty damn close. The reason why we didn't go below it, because of obviously BTC, is due to the amount of projects that are now out. Now, there's a lot of projects. We're going to go into the low capital kind of stuff in a bit. But this is a big metric anyways in terms of the overall space. Not everything will get added up onto this in terms of the crap coins, but ultimately majority of the market is on here, and we have bounced. We're obviously going to bounce, but again, if we're going to do some simple analysis here and looking at certain levels from the obvious kind of, I'll flip that, there you go. So you can kind of see here, let me just do that correctly because that was a dog's dinner. There you go. The market could pull up. Now this red box here is the previous levels of resistance from the past, or previous supports now flipped as resistance. Now that is around this 382 level, around 1.3 trillion. As I say, wouldn't shock me the slightest if we start to go that way to see if we can reclaim some levels, but we'll see. Now I am already pinpointing this level here. I think we probably won't go that high. I think $1 trillion psychological number for the entire market cap is probably going to be, in the trader's eyes and in the investor's eyes, probably pretty psychological, kind of bearing fruit of your mind that if we get over there, happy days. If not, tumble. So we need to be careful, right? But for me, I think further down, due to quantitative easing, well, transitioning to quantitative tightening from that metric, but ultimately money getting pulled out of the market is not a good thing. Obviously uncertainty, liquidity crisis could be happening in the stock market, and I've often said about the S&P 500, it could be falling much further than you think because of how the stock market has been propped up for a number of years now. Finally, I want to talk about Ethereum. Now, this is the one that's really, I think, hurt people more than anything, and I'm just going to leave the structure like this because I think it's kind of perfect. That 0.27 is acting as resistance. That is a previous all-time high from last time. So I would suggest maybe that could be the level of interest for a lot of people. So just be careful with these little rallies. So as I say, these bear market rallies, they look mad, and they are mad because I'm going to go over to the low price action to show you some things. Now, this is where it gets important. The low unit PA is where you should be flipping your bias from maybe USD trading into the underlying asset, inverse trading. I do this on Bybit. Crack on if you want to use the link below. But essentially what this does is it's allowing you to trade the underlying unit. So let's just say Polkadot as an example here. If you've got 10 Polkadot and you're trading it, you either get it, or if you lose it, you lose it, right? Makes sense? So you're not trading in USD, but the element is if you are accumulating units, right? This is where it gets interesting. Accumulating units, you're growing your bag. If this does, say for example in like 2 years time, whatever, go to all-time high and you are accumulating a load of units throughout this time period by basically trading it, not just USD, well, you're going to eventually get paid for it, right? Let's be fair here. So when we're talking about this, and this is a weekly time frame, DOT is currently up 6%. You're looking at that and you're thinking, is it? Really? Cool. But when you go down to the lower time frames and have a little bit of a look, you can start to see what's kind of happening. And this is where it gets dangerous. You can see that here with Polkadot, these little bear market rallies that really do, like let's just talk about this from this low to this high. That is a 38% on Polkadot. So if you are obviously trading that and you got 100 DOT, and you obviously top to bottom doesn't really exist, but you get the idea here. If you've got 100 and you go up 38% and you've utilized your whole bag, which is a really bad idea, but you get the picture, you'll have an extra 38 DOT. But that is just simple maths. But realistically, when you are looking at these kind of situations, they are volatile. This is where mistakes are made. And you need to be very, very careful, because you are thinking, right, I want to sell my bag, whatever, to accumulate some units to buy lower. And then all of a sudden you wake up, it's like, ooh, right, okay. Yeah, we're going up. Oh, crap. And then all of a sudden you've bought back in on resistance, and then it goes, boom, right back to your target. You're thinking, I've just lost a load of units. So please be careful with your low market PA, because it gets very, very interesting, because the lower these units will go in terms of dollar price, the more aggressive they will come. And I will show you, because when you look at the biggest gainers on CoinMarketCap, all of these random coins called liquidity gaps. These liquidity gaps are because of big sell orders and big sell limit situation where they've been blasted through. And then whenever the buyers step back in, they will go, boom, bang, back up again very, very, very quickly, very, very quickly. And this is where it gets interesting. Now, most of these are rubbish coins, let's be fair here. But in terms of some of the gains, you will find some pretty interesting coins that will do some awesome gains just because there's a big gap in the market. And that's where it gets really interesting. We see it all the time. There's a random coin the other day that went mad. It was like, what? Even though everything was dumping. Look at, FTM here. Breakout, going to the upside, potentially recovering. It's like, yeah, great, happy days. But realistically, though, go to the weekly time frame. You know what I mean? It's mad, isn't it? It's mad. So you got to be somewhat careful with these little rallies, right? So don't get caught out with the emotion and the greed of the green candles and stuff like that. Just make sure you understand what you're doing. If you're in a mega downtrend on majority of these time frames, looking pretty horrible, don't get caught up in the emotions of trying to buy the pump. Buy the level what you should have already pre-planned, because technically this level here probably would have been a level because it's consolidating from the past. If you zoom out enough, it was. So you can see that. So technically, you buy the level and you sell that rip. Anyways, enjoy.